Sound production.
Okay guys, here is the dollar index. We get to see that we have our demand zone, but as you can see, our demand zone is too big. So we get to ask ourselves, where do we make an entry if it's like this? So then now our QML gets to make things simple now. We get to see that our entry is here. So we can use our QML for entry, okay? So we get to see that price took out this low here, collected liquidity here. Price took out this low, see price taking it out. And then price quickly ran away and it took out this high, forms a higher high. And then we see price dropping now to get to this level of our demand. But then our demand, it's a range that is too big. So then now we get to know our specific price point based on our QML entry. So we enter. And then we go to the EURUSD. It's the same thing. We get to see that price come here, collect liquidity here, and then price quickly rally away. Okay? And then price gets to our QML here. Then we see the market dropping. Same thing here. Here's another example. We get to see our QML here. Price hits here, and then we see price going up. I can go all over and all over showing you this stuff, but without any waste of time, let's call it a day. Okay, folks, this is what we have. We're gonna be putting emphasis on supply and demand and how to trade supply and demand with your QML. This is just a little bit of structure just to illustrate something, and then after that we go to the chart and show you something. So now let's look at this. Suppose we have price coming to, let's say suppose we have price, we see price dropping, it take out this low that we see here, price take out this low, we get to see price trading coming down, collect liquidity here, and then forming a lower low, and then we see price going up. Okay, once we see price going up, we expect this area to be our supply zone. And the reason why we get to say this area is our supply zone, it's simple, because price has collected liquidity here. So now we get to say, since price has collected liquidity, we expect this area here not to be violated. Okay, so then now we get to see price coming down, and when price coming down, we get to see people saying this is a demand, of which it's a mistake that a lot of people get to fall for because they don't understand order flow. Based on order flow, this is not our demand. So then now we get to see price coming here where they have indicated that is their demand, and price take them out and they got stopped. They lose all their money. So the concept, it's for you to understand that price is not being moved by the lines we draw on the market or by whatever support and resistance that you can think of. Price is not being moved by those things. Price is being moved by liquidity. Price is looking for liquidity. It seeks liquidity in the market. So there are certain areas which you need to understand now where it's the liquidity. So the question every time when you get to the market, you need to be asking yourself where it's liquidity in the market, because price is looking for liquidity. Where the money is, that's where price is going. I repeat, it is not any line you can draw in the market that can cause the market to change direction. It is not that. The market is looking for liquidity. So our approach when it comes to the market, it should be the understanding of liquidity. And when you go deeper to order flow, you begin to understand how does the market flow? How does the market moves in an extent that you understand the price algorithm. But for this discussion purpose, we're not going to be talking about order flow, because that's beyond that's institutional trading, which is on our mentorship. So here we are focusing on supply and demand zone, which is something which is a retail trading concept. It's not institutional trading concept, but the approach to it, I'm trying to add a little bit of value based on the perspective that I have based on institutional trading. So this is just me adding value to it, but this is not institutional trading, trust me. And you're gonna make a lot of money with this stuff that I'm sharing here. You're gonna make a lot of money, and I've seen people giving me feedback and getting back to me and telling me that, no man, your stuff, your free stuff has been helping us and stuff like that. Trust me, there is more. So now let's get to we get to see price coming here on this low here. We get to see price violating this low here, collecting liquidity here. So we now know that prices collect liquidity. So we get to see price coming out. And when price is going up, we get to say this area, it's gonna be our supply. Why? Because price has already collected liquidity here. So we don't expect this area here to be taken out, because we need to understand that liquidity is resting on previous lows and previous highs. So that's where the money is, that's where the stop loss are. So the market is gonna come and get rid of those stop loss of the retail traders. So now these guys, they move in a certain way that they need to collect liquidity somewhere, somehow. So we get to see that price is coming down here, it collects liquidity here, and then since price collected liquidity here, we get to see price going up. And when price is going up, we expect this area here not to be taken out. Okay, why? Because price has already collected liquidity here, so we expect this area not to be taken out. So this is therefore our supply zone. So what you can say, the fact that price came here and took out this low, it sort of now qualifies this area to be a supply zone. Okay, so then now we get to see price going down, and when price is going down, we get to see a lot of people making that mistake to say this is a demand. It's not a demand. Price is gonna take this thing out. I hope I'm clear, because we get to see that price didn't collect liquidity here. Price didn't took out this high that we see here. So therefore, since price didn't took out this high here, and we say price is looking for liquidity, the next liquidity, when we see the market dropping here, the next liquidity that is being exposed, it's the one that is resting here. So price come and collect it. So we should avoid this area here to say this is our demand zone. I hope this is clear. If it's not clear, you can go to the previous video, which I've made. The first videos about supply and demand zone. They're gonna explain more. So, but then we have a problem here, where we get to say supply and demand zones. They are just something that give us a lot of it gives us a lot of a sort of a range, so we don't know the specific point where to enter. So that is why we now get to move to QML, so that we use it in line with our supply, so that we get the specific entry or the specific price point where we can say we're gonna sell or buy. So then now we get to see that we have something which is called a QML. We have a higher here and a higher high and a lower low. In a low and then a lower low. So this is the structure of a QML. If you see the low being equal, the lows being equal here, it's not a QML. It's something which is called head and shoulder, if I remember very well, in the retail trading world. But then that's something, it's something that we are not talking about. So once you see these lows are equal, you ignore it. It's no longer your QML, okay? So then now we get to see that price came here and collected liquidity, and then price formed a lower low while it was collecting liquidities here. So we get to see that price now is going up. Since price collected liquidity here, we don't expect price to take out this higher high. So we expect price to come back and respect this previous high that we see being violated here. So then price come back now and respect the area, and we see price dropping. I hope this is clear. Then we get to see the same thing here that we see. This is just a vice versa of this, up and down of this, so it's the same thing. So then now we get to the fact that this is what I want to show you now. We can combine supply and our QML. If you see, this is a QML structure. We have our low here, we have our low being violated, forming a lower low, and then we have price coming up, and then we see price going down. So this is the same structure as this, but at the same time you can also see that it's the same structure as this. Why? So that's why now you need to get to understand that you need to combine your QML and your supply and demand zone trading concept. So then you combine it with the QML, so it sort of give you the specific price point where to enter, because with supply and demand zones, those are just zones, they are ranges. So it sort of becomes, sometimes it becomes a big range. So now you need something that's gonna give you a specific price point to say, where do I enter? So that's when QML comes in. So without any waste of time, now let's go and dive deep to the market, and then I show you what I'm talking about or what I'm trying to illustrate here. So then now let's get to the US dollar